Hey everyone, welcome to this deep dive on Ethos Ltd's Q2 FY25 results.
Yeah, you're in the right place if you want to get like the real story behind how they're doing, beyond just like what the numbers are saying.
Absolutely. We've got a whole stack of sources here, like their official announcements, the investor presentation, and even some questions that came up from the analysts on their earnings call.
Yeah, so like let's really dig into this and see what's going on.
All right, let's start with those big headline numbers.
Yeah.
Ethos's revenue jumped up a whopping 22.6% year over year. That brings them to 570.4 crore rupees in the first half of FY25.
And their EBITDA, that's up 22.2%. And their profit after tax is keeping pace with that at a 19.9% increase. Pretty impressive, right?
Yeah, it's not bad at all. And their CEO, Pranav Sabu, he's actually aiming for 10 times revenue growth over the next decade.
Wow, that's ambitious. So are these results telling us that they're actually on track to hit that kind of a target?
Well, looking at how their growth is breaking down, it does seem like they might be on the right path. For example, their sales in the luxury and high luxury segments are taking up a bigger and bigger chunk of their total business.
Oh, yeah. I saw that cool chart in their presentation, too, showing how that's been steadily climbing up. But it makes you think, like, what does that say about people in India and how they're spending their money?
I see what you mean. Like, are they wanting more premium brands?
Yeah, like brands that kind of show off their success, and you know that not everyone can afford.
Well, it's like a status thing.
Exactly. And Ethos is right there, ready to tap into that whole trend.
It's not just about the price tags getting bigger. They're also selling more watches overall. Like their volume grew by 17% in Q2.
That's a really important point. It shows that they're not just raising prices to make more money. They're actually bringing in a bunch of new customers, too. Now, what about their EBITDA margin? It went up, but it also dipped just a little bit to 16.8%.
Right, and Cebu pointed to a few reasons for that. The value of the rupee going down compared to the Swiss franc,
Right.
the cost of hiring people for all these new stores they're opening,
Mhm.
and the rent for those stores that aren't fully up and running yet.
Ah, yeah, that currency exchange thing. That's something to watch carefully. You know how much Ethos depends on global markets? We should definitely keep an eye on how they're planning to handle that risk moving forward. Cebu did mention they have a whole risk management system in place, but
Yeah.
yeah, we'll have to see how that works out in practice.
And speaking of expansion, they're going all out. 12 new stores since April. And they've got plans for 13 more by the end of FY25. Their investor presentation even had this awesome map. You can really see how they're spreading out across 26 cities.
Wow, so that expansion strategy is a big deal for them. It's about reaching more people, getting into new cities, and really tapping into that growing group of wealthy individuals in India who are all about luxury brands.
And it's not just about the stores. They're also bringing in some cool new brands to keep things interesting. 3 new exclusive partnerships just in the first half of FY25, and more are on the way. Revenue from those exclusive brands is already 28% of their total sales.
That's a smart move. It sets them apart from those stores that carry a million different brands. It makes them seem more exclusive and really strengthens their place in the luxury market.
Yeah, they've added some really cool names to their lineup ID. Geneva Pay, a Swiss brand that's all about sustainability, which is really hot right now. And then there's Singer Reimagined, which is known for its super high-end watches. They're part of the Singer Group, the same people who steer those classic Porsche 911s.
Oh, wow. Talk about a connection that screams luxury.
Mhm.
And then there's Hotlens. Did you know their name is actually an anagram of Neuchâtel? It's like Swiss watchmaking history baked right into their name.
Okay, so we've seen that Ethos is doing great financially, but what about the big picture? Can they really keep this up?
That's the real question. Their investor presentation is banking on this idea that the number of super rich people in India is going to keep going up, which makes sense on the surface, but there are definitely some hurdles in their way.
Now let's dig a little deeper into those financials. One thing that really stands out is that Ethos actually gives us 2 sets of numbers. They show us the reported figures and then the figures adjusted for all the currency stuff.
Yeah, remember how we were talking about the rupee weakening? Well, those reported numbers show the EBITDA margin dipping just slightly to 16.8%. But when you factor in those currency changes, the margin actually jumps up to 17.6%.
So their core profitability is actually even better than it looks at first glance.
Exactly. It's like a reminder to look beyond just the surface level numbers and really understand how things happening in the world can affect a company's performance.
Okay, so we've got the big picture, but Ethos also breaks things down without the impact of IND AS 116. Yeah, I'm not an accountant, so what does that even mean?
Okay, so IND AS 116, that's the accounting rule for leases. And
Mhm.
sometimes it can make a company's profitability look a bit different than it really is, especially for businesses that have a lot of leases. Like, think about all those retail stores.
So what happens when we take IND AS 116 out of the picture for Ethos?
Well, their reported EBITDA margin goes down to 12.5% without IND AS 116 compared to that 16.8% with it.
Wow, that's a pretty significant difference. So what's the takeaway here?
It basically tells us that those lease obligations, they do have a big impact on how profitable Ethos appears on paper. It's something to keep in mind when you're looking at their overall financial health.
Okay, so we've covered the financials, but let's zoom out a bit. Ethos is really banking on the luxury market in India continuing to grow. Do you think that's a safe bet?
Well, their investor presentation makes a pretty convincing argument. They're pointing to the increasing number of high net worth individuals in India as a key driver.
And they even included a chart showing how the average price of their watches is going up, which seems to say that people are happy to spend more on luxury goods.
Right, but we have to remember that luxury spending, it's not like buying groceries. It can change a lot depending on how the economy is doing.
So if the Indian economy takes a hit, Ethos might feel it.
Exactly. It's a risk they need to manage carefully. Plus, they're not the only ones in the game. Competition in the luxury market is getting tougher, with new players popping up online and in fancy brick-and-mortar stores.
Right. So they can't just ride the luxury wave. They have to set themselves apart. Those brand partnerships, their new stores, and their focus on the whole customer experience. Those are all ways they're trying to do that.
Definitely. And speaking of those brand partnerships, they've made some interesting choices, bringing in those exclusive brands like ID, Genevieve Singer Reimagined, and Shots.
It's like they're creating a carefully chosen collection.
Yeah.
A place for people who are really serious about watches and want something special.
Exactly, but focusing too much on those exclusive brands could also backfire.
Because not everyone can afford those super high-end watches.
That's part of it. They need to find a way to appeal to a wider range of customers while still keeping that premium image. It's a tricky balancing act.
Okay, let's move from the products to the people. What did the management have to say about all of this?
Well, CEO Pranav Sabu, he really stressed how important talent is, both attracting the best people and then helping them grow. Remember, they're aiming for that tenfold increase in revenue, which means they need a top-notch team.
He's got a point. Building a team that can actually achieve those goals is just as important as those brand partnerships or opening new stores.
Absolutely. Especially in the luxury world where personalized service and expertise are so important. People are their most valuable asset. Sabu also highlighted their risk management framework, particularly how they're dealing with all the currency fluctuations.
Yeah, that makes sense given how much those currency swings can impact their bottom line.
Exactly. Any company operating in a global market, they need a solid plan to handle those risks, whether it's wild currency changes or disruptions to their supply chain.
So it sounds like they're aware of the challenges, and they're working on ways to tackle them. Of course, only time will tell how effective those measures will really be.
True. The luxury retail world, it's constantly changing.
Uh.
Ethos needs to be adaptable and stay ahead of the game.
Now let's shift gears to their expansion strategy. It seems like they're opening new stores at lightning speed.
Yeah, they've added 12 stores since April. And get this, they're planning 13 more by the end of FY25. They're not slowing down.
I remember that map from their investor presentation, showing all their locations across 26 cities. It's pretty impressive.
Yeah, that expansion is a big part of how they plan to grow. It's all about reaching more customers, getting into new markets, and making themselves the go-to place for luxury watches in India.
But expanding that quickly can be risky, right?
You're absolutely right. If they're not careful, it could strain their resources and even hurt their brand if it's not done right.
So it's all about finding the right balance. They need to make sure each new store makes sense strategically. It needs to add value and contribute to their profitability.
Exactly. They have to be strategic about it, considering things like location, the type of store, and who they're trying to attract. And of course, they need the infrastructure and the right people to support all that growth.
Otherwise, they risk spreading themselves too thin and messing up their long-term success.
Exactly. Now, one thing that's interesting about their expansion is their focus on opening stores in malls.
Malls make sense though, right?
Yeah.
You've got tons of foot traffic. A lot of their target customers are already there, and it's a chance to really showcase their brand and create a more immersive shopping experience.
You got it. But malls are also super competitive. They need to stand out from the crowd and give shoppers a reason to choose them over all the other options.
And mall rents are notoriously high, plus all those operating costs add up.
True. So they really need to make sure they're bringing in enough sales to justify the investment. It's a calculated risk, but if they play their cards right, it could pay off big time.
Okay, so let's step out of the mall and talk about their expansion into new cities. They recently opened stores in Kochi, Dehradun, and Mangaluru.
Yeah, that's a bold move.
Yeah.
Going beyond those big metropolitan areas, it shows that they're serious about reaching a wider audience across India.
But new markets also bring new challenges. They need to figure out what local tastes are like and make sure their offerings fit.
Absolutely. What works in Mumbai might not work in Mangaluru. They need to do their research, adapt their marketing, and maybe even change up the products they offer to connect with the local crowd.
And building brand awareness in those new cities is crucial, isn't it?
Definitely. Especially in the luxury world. People want to know that they're getting the real deal. They need to build trust and credibility.
So it's not just about setting up a store. It's about building relationships, understanding the local culture, and creating a personalized experience that speaks to that specific market.
Exactly.
Now let's talk about another part of their expansion strategy. Those standalone boutiques, especially the ones dedicated to a single brand.
Ah, yes. This is all about creating that ultra luxurious and exclusive feel. Imagine walking into a store dedicated entirely to, say, Rolex or Patek Philippe. It's a whole other level.
Yeah, you're totally immersed in the brand's world, surrounded by their history, craftsmanship, and design philosophy. It's an experience, not just a shopping trip.
Exactly. These boutiques, they're like destinations for serious watch lovers, for
Yeah.
people who are loyal to a particular brand and want that special experience. But of course, standalone boutiques have their own set of challenges.
I bet the costs are even higher than a mall location.
You're right. Rents are typically higher and operating costs are steeper. So they need to be really confident that they can generate enough sales to make it worthwhile.
It's a big gamble, but it also gives them more control over the brand experience. They can really curate every detail, from the store's design to how their staff interacts with customers.
You got it. It's about elevating the brand, offering that premium service that sets them apart from those multi-brand retailers.
And while we're talking about different ways to shop, let's not forget about their online presence.
Yeah, their online platform is becoming more and more important. Their investor presentation actually highlighted that online sales jumped by 24.7% in Q2.
That's a huge jump. It seems like people are getting more comfortable buying luxury goods online.
It sure does. And Ethos has really put a lot of effort into making their online shopping experience smooth and engaging.
Yeah, they've got great photos, detailed product descriptions, a website that's easy to use. It's all there.
And they've gone even further by adding things like virtual try-on and personalized recommendations. It's a smart way to bridge the gap between shopping online and shopping in a physical store.
So they're not just copying their physical stores online, they're creating a unique digital experience that's tailored to online shoppers.
Exactly. And that's crucial these days when online retail is so competitive.
But let's not forget about those beautiful physical stores. How are they adapting to the changing retail landscape?
Well, they're moving away from that old school model of just browsing and buying. It's all about creating a memorable experience.
Like they're offering things like watch customization repairs, and they're even hosting events and workshops. It's about giving people more than just a transaction.
Exactly. These extra services help build customer loyalty and make them stand out from the competition.
It's like creating a community around their brand, building a deeper connection with their customers.
Got it. It's about building relationships, not just making sales. Now, let's go back to their financial performance for a second. Remember that metric called same-store sales growth, or SSG?
SSG, can you remind me what that's all about?
Sure. SSG tracks how much sales are growing in stores that have been open for at least a year. It's a good way to see how healthy a retailer is.
And Ethos reported an SSG of 15.5% for the first half of fiscal year 25.
That's a really good number. It tells us that their existing stores are doing well and people keep coming back.
So their brand is connecting with people and their stores seem to be running smoothly.
Exactly. It's a positive sign for their long-term growth. Now, what about their average selling price, or ASP? We mentioned earlier that it's climbed to Rs 2.16 lakhs.
Wow, that's not cheap. What's driving that increase?
It seems like people are willing to spend more on luxury watches these days. It could be because of a bunch of things, like people having more disposable income, a growing appreciation for those luxury brands, or even just wanting those status symbols.
Yeah, it's probably a mix of all those things.
Yeah.
But for Ethos, it's a good sign. Shows they're attracting the higher end of the market.
And usually when those average selling prices go up, it means higher revenue and maybe even better profit margins.
But they have to be careful not to push away their current customers or make their prices too high.
Absolutely. It's all about finding that sweet spot. Now let's talk about the product mix. Ethos offers a ton of different watch brands, from entry-level luxury all the way up to the super high-end.
Yeah, that makes sense.
Yeah.
They need to have something for everyone. Different budgets, different tastes.
Exactly. And they've been smart about adding new brands to their lineup, both exclusive and non-exclusive ones. It keeps things fresh and brings in new customers.
So they can't just bring in a million brands, right?
Yeah.
Wouldn't that hurt their image?
You're right. They need to be careful about which brands they choose. It has to fit with their overall brand and who they're targeting. They want to be known as the place to go for people who are really serious about watches.
Now, speaking of their target audience, Ethos is really laser-focused on those high-net-worth individuals or HNIs.
Yeah, those H&Is, they're the lifeblood of the luxury market. They've got the money to spend, and they want those luxury goods and experiences.
And Ethos has clearly done their homework. They understand these customers, and they're catering to their tastes.
They offer personalized service, exclusive events, and a hand-picked selection of brands that appeal to these discerning shoppers.
But the thing is, those HNIs, their preferences are constantly changing, aren't they?
That's true. They're becoming more sophisticated and demanding. It's not just about the products anymore. They're looking for experiences, exclusivity, and a sense of community.
So Ethos needs to stay ahead of the game. They need to keep innovating and evolving to meet those changing expectations.
Absolutely. They need to be one step ahead, anticipating what their target audience wants and needs.
Now let's talk about their competition. Ethos has to go up against other luxury watch retailers, both online and in physical stores.
Yeah, the luxury market is getting more and more crowded. They're facing competition from the big names and from new players who are trying to break in.
So Ethos needs to find a way to stand out. It's not just about having a great selection of brands. It's about the customer service, the whole shopping experience, and how they use technology and data to personalize that experience.
You nailed it. They need to create a seamless journey across all channels, whether it's online, in-store, or on mobile devices. It needs to be easy and enjoyable for customers to shop with them.
So it's about creating a value proposition that really connects with their target audience.
Exactly. It's about building a brand that represents something more than just products. It's about creating a lifestyle and aspiration. Now let's take a step back and think about the bigger picture. The luxury market in India.
The luxury market here, it's still relatively young compared to other developed markets.
True, but it's growing fast. Things like rising incomes, more people moving to cities, and a growing middle class who are looking for those finer things in life. It's all fueling that growth.
Ethos seems well positioned to take advantage of this growth. They've got a strong brand, a wide network of stores, and a deep understanding of what Indian luxury consumers want.
But they're also going to have to navigate the challenges that come with this dynamic market. We're talking about a volatile economy, increasing competition, and those ever-changing consumer preferences.
It's a fascinating market to watch, that's for sure.
And it's going to be interesting to see how Ethos evolves and adapts in the years to come.
Now let's dig into some of their specific strategies.
Right.
One area that stands out is their focus on customer experience.
Yeah, they're investing a lot in making the customer experience better across the board, both online and offline.
They've rolled out personalized shopping consultations, exclusive events, loyalty programs, and they're putting a lot of effort into making their stores more welcoming and engaging.
Those are all smart moves. In the luxury market, the customer experience is everything. It's about creating a sense of exclusivity, personalization, and top-notch service.
Another key strategy is their focus on omnichannel integration.
Yes. They're working on making the shopping experience seamless across all channels, online, in-store, mobile devices. It all needs to work together.
They've implemented things like click and collect reserve online and ship from store. It's about giving customers options and making things convenient.
Exactly. These initiatives let customers shop however they want, and it helps Ethos manage their inventory and fulfill orders more efficiently.
So it's not just about having different ways to shop. It's about making them all work together seamlessly for a unified experience.
Precisely. And that's crucial these days. Consumers expect a smooth and personalized shopping journey.
Now let's talk about their sustainability initiatives.
Ethos is getting more and more serious about sustainability, both in how they operate and the products they offer.
They've taken steps to reduce their environmental footprint. Things like using recycled materials in their packaging and cutting down on energy consumption.
And they're partnering with brands that share their commitment to sustainability.
These initiatives show how important sustainability is becoming for consumers. especially those who buy luxury goods.
Consumers are more aware of the environmental and social impact of what they buy, and they're looking for brands that reflect their values.
So it's not just about being a responsible company, it's about meeting the expectations of their customers.
Exactly. Sustainability is becoming a big deal in the luxury market. It's a way for brands to set themselves apart.
It sounds like Ethos is in a really interesting position, doing well, but also facing a lot of challenges.
Yeah, they've got a lot to juggle. Strong financials, ambitious expansion plans, smart moves with those brand partnerships, and a real focus on the customer experience. But the luxury market, it can change quickly, and there's a lot of competition.
So what does all this mean for the listener? We've gone through Ethos's Q2 results. We've looked at their strategy, and we've talked about the good and the bad. Now you've got a solid understanding of where they stand and what they're up against.
Exactly. But the big question is, what do you think about all of this?
Here's something to think about. Ethos's success, it kind of reflects this bigger trend we're seeing, the rise of the luxury market in India. Is this a sign that things are changing? Are people just wanting more and more luxury goods and experiences? And if so, what does that mean for the future of luxury retail in this region?
Those are some big questions.
Mm.
And the answers, they could have a huge impact on businesses, investors, and shoppers. So keep exploring these ideas and see what conclusions you come to.
Thanks for joining us on this deep dive into Ethos Ltd. We'll see you next time.